So what I'd first like to talk about real briefly before we have our CEO come up here are these 7 points. And to me, it kind of summarizes both our year past and what we're looking for moving ahead. It's so great to be here together again as we talk about the success of our cooperative and where we're going. But first of all, again, I'd just like to officially say welcome to our annual meeting. These certainly are challenging times, but as we move through them, I believe there's opportunities through all the challenges. And we're going to talk a little bit about that and what these opportunities have meant to us through the year. But as I said, I just want to highlight these 7 points as we move through and just talk about, the fact that the cooperative is here as your financial partner. Yes, the financial results are really the key, but also the services that we heard to talk about, the expertise, the knowledge that the experienced staff affords us as customers and helping us really navigate this business environment. So I just want to talk a little bit about that here this afternoon. So the first part I want to talk about is just being stronger together. And nothing makes me smile more, and probably most of you here, than to see that picture in the bottom right-hand corner. It's something that, really proud of. Everybody in this room should be proud of, and the fact that now we're, really working together as we always have been, but now it's, I guess, official because it's colored in, right? So as you know, early last year, kind of in the midst of all the challenges, an opportunity came up, and this was with the departure, the Yankee Farm Credit CEO Brenda Frank, who is now currently at CoBank. So we still have the pleasure of working with Brenda. But at that point, that was kind of a surprise. It came up, and at that point in time, the Yankee Farm Credit Board really had an opportunity to evaluate their strategic decisions moving forward. And so as both boards kind of looked at the opportunities, one thing really became clear, that we were really much more alike than we were different, and that it was a great opportunity to explore this merger between our two cooperatives. So as we kind of began on that path, we instinctively knew that it was a good fit. We have similar agriculture, similar geography. We'd already had a history and experience of working together on a lot of projects, such as crop growers that many of us use to help manage our risk, such as ag enhancement, which is a program that helps with our stewardship opportunities, industry support, youth programs, leadership programs, and the likes. And then also a Farm Start program. We had our annual meeting here earlier today. It's an example of how both organizations were helping kind of the next generation of farmers with this investment in the Farm Start program. And as I talk about that, I'd be remiss without noting we have a lot of our partners here in CoBank in the room, and it is currently a program that CoBank and Farm Credit East are key strategic partners in. But really, first and foremost, what we realized as the boards were working together is we engaged with the Yankee Farm Credit Board. It's how much both organizations really had the customer front and center and were focused on the customer. We had the opportunity in August to have both boards have a strategic meeting together. Kind of last minute, we dodged a tropical storm and hurricane and had a couple last minute change of plans, but it was an excellent meeting where we had an opportunity to really solidify what we knew, that we were headed in the right direction, that we really were meant to work together. But it confirmed that our two boards were really uniquely aligned to move forward. So without recounting any really more of the details, suffice it to say that it took a significant amount of time on both the staff and board time and effort, but something that was well worth it. I'm very proud to be serving customers in the entire Northeast now, very proud of the efforts of both the staff and management to get there. And as you know, this merger became effective January 1, so we are now fully focused on working on behalf of all farmers, ranchers in the Northeast. So it's a proud moment and a great opportunity in the midst of the challenges we're in. The second point I want to cover is customer value and really what that means. Just to point out, as we look at the graph on the right, I just want to make a note that is really with Farm Credit East numbers only. If we were to add the Yankee Farm Credit total for 22, it would be $100 million that we would add. So it'd be a total would be 1.2 billion. So just if you look at that and think it looks a little off, just so you understand that. And you'll hear a little bit more in a minute from Mike Reynolds as he talks a little deeper into our financial results. But as your board chair, I'd just like to give you a little bit of my perspective and our board's perspective on customer value. And to us, we all in here look at the bottom line all the time, but value maybe means a little bit more to each of us, whether we need a little more assistance. If we heard up here what value means to these customers, whether it's in tax planning or payroll or appraisals or consulting, that all brings great value back into our businesses. But one thing that really is a value is that strong patronage program that we continue to offer as a cooperative. The philosophy of the board has always been to earn it first, and then what is not needed to operate a successful and sound operation, and to reinvest in our members. And that is what we just have done here. We have $100 million put back in patronage here this spring. As we know, often when we think of effective interest rate, we think of just the competitive rates, and we maybe not always factor in that patronage dividend that comes back, which really does lower the effective interest rate. So it's a very important tool and a very important part of our cooperative model, and that we all benefit from. So that value of the cooperative dividends really are significant. As I said, for the current Farm Credit East members, between the $91 million paid by Farm Credit East and the $9.1 million paid by Yankee Farm Credit on the 2021 earnings, farmers and ranchers in the Northeast have just received over $100 million. And that's an average about an effect of 1.25% on interest rate reductions for the average customer. And that's real money back in our pockets, real money back in our communities throughout the Northeast. So it's a very, very important part of our cooperative model. It's important also to know that since 1996, since this has been in effect, Farm Credit East and its predecessors have returned members more than $1.1 billion in dividends for being owners of our cooperative. And while the cost of borrowing money is important, like I said, the customer value goes way beyond that. Farm Credit East financial strength is important in many ways. It builds a capital that we need to have the capacity to meet all of our financial needs. And it also gives us that capital to stay with all the customers. As we know, and we've all seen, we have a very diverse agricultural sector here in the Northeast. As some of you have heard me say before, we look around the country, and I would argue we may have one of the most diverse portfolios. When we go to the middle of the country, and their diversity is hogs or corn, or corns or hogs, so, that gives us we will have ups and downs in all of these. And so a strong capital base really gives us the strength to stay with all of our customers through the ups and downs of all of our industries. And so that brings us to having that strength, and that capital strength brings us to the next point when I want to talk about investing in our future. And you heard a couple of the candidates talk a little bit today, and you'll hear Mike talk quite a bit more in a minute about our digital strategy and the spend. And we all know in our businesses what an investment that is, and it's an investment that doesn't end. Once you've kind of gone down that technology path, it just keeps going, and it gets more expensive. I mean, I know that. I'm sure all you in your businesses know that. So Farm Credit East is no exception in our business. So as we invest in our future, it's good to know that our past investments have already paid off in ways we couldn't have imagined. And we look at 2 years ago when the pandemic hit, nearly all our staff were able to work remotely without really skipping a beat. I know I didn't hear customers yelling, complaining too much, but certainly we were able to get our needs serviced because we had made that investment in technology, and we have to keep building on that and going with that. And as all our businesses begin to return to more pre-pandemic normals and way of doing business, it's clear in our businesses and here at Farm Credit East for staff, it's never going to be exactly the same as it was. During the pandemic, we realized that maybe there are some better ways to do things, and we may all end up in a hybrid model, but technology is going to help getting to that. So as we continue to invest in our future, this is the way we're going to continue to build and do better. So as we talk about that, now it's time for that next generation of all these digital tools and this technology. And Mike's going to talk a little bit more about this, but as the goal for these digital tools is to make it easier for us as customers to do business with the lender, with our cooperative, with Farm Credit East. We need to continue to protect our customer information, but free up the time for our staff to do business with us, to come out in the farm. And, I often hear people say, I still want to make sure I have that relationship. And I can tell you that is a constant discussion from in the boardroom and in management and staff, that this technology and just keeping up with the cost of doing business is not meant to replace our people. I know my business, I'm sure your businesses, we can have great technology, but we need greater people. And so this is meant to really be, in addition to help us, a tool. These are tools to help us do business better as a cooperative, to serve our customer members better. And so we really just want to reiterate that fact as we talk about this build out and this digital spend, that it's the people that really make the difference. And, we are fortunate in Farm Credit East to have that experience. You're going to hear a little bit about some of these. We have many 30, 35, 40. It's not uncommon to have that for tenure of staff. And so we have the experience, we have the knowledge that really helps serve our businesses. So in our changing business environment, we are going to continue to provide these risk management products and tools, the insight and the expertise to support our businesses as we navigate these changing industry conditions and these changing times. And in addition to the capital, we'll continue to provide high-value financial services to keep us in compliance and positions for the future, so that we as customers can continue to focus on our businesses. And finally, as a cooperative, we talk about governance. You heard here through our director elections how important this is. It's important to vote. It's important to be involved in our cooperative. Governance is a key consideration. And it starts with selecting, for the last couple of years, our CEO process and selection and selecting a new CEO, to rolling right into a global pandemic and then a merger. Obviously, we've put a lot on the board of directors' plate. So I would really like to take this moment just to thank every one of my fellow directors here in this room, because it's been a ride, folks, and as well as the staff. But it starts with good governance, and we've been able to survive that ride because we have a great team. We have a great board and we have a great staff. So as we move on to our next step, it's my segue into our great board. As you can see, so when we had the merger effective January 1 with Farm Credit East, part of that agreement was that 3 directors would join us from the Yankee Farm Credit board. They were chosen by the Yankee board. So we were really pleased to welcome Tom Colgan, Dave Foligno, and Kyle Tygeson that have joined our board effective January 1 from the Yankee board. And, I know certainly from my perspective, and certainly talking to those 3 and others, I think the way we spent last year and they came to our board meetings as guests, John Nope and myself went to their board meetings as guests. So January 1 was not a surprise to anybody, and it just felt like it worked. So we're really happy to have them join us. Then to the right, you will see the mugshots of all the other board members. So basically our full board has 19 members. At the close of the current election cycle, we will consist of 19 directors, 15 of which will be elected, and 2 will be appointed customer directors and 2 will be appointed outside directors. It's part of our regulations that we have outside appointed directors as well. As part of the merger agreement, what we did is we realigned the director regions. We'll be combining seats and adjusting the terms. So seats will come up at different times for different, stagger the terms for seats. And with these changes, our board size will reach its final structure in 2026. That will have 12 elected directors and at least 2 appointed directors. That is our minimum requirement by FCA. So that talks about our board governance was one of our pillars, and that rolls right into our director elections. I won't belabor this a lot, but really the bottom line, you heard from 6 great candidates. And at the end of the day, the bottom line is please vote. Vote, tell your friends and family to vote, neighbors to vote. That's the important message that we come away from here. So of these 6 candidates that you just heard from after the meeting here, there'll be an opportunity. We'll see a video from them. We'll also have I call it the board receiving line. So you'll get to see them as you go out before dinner, and then there'll be a full video afterwards. So please take a few moments to introduce yourself to these folks if you do have a chance to do so as we move on. My next bullet point was talking about a cooperative involvement. So clearly there's a lot that happens and a lot goes on, as you've seen with our nominating committee report, et cetera, before directors get to this stage and to a vote. But at the end of the day, we are a grassroots organization. We are cooperative, and your involvement is really critical. Clearly, everybody here knows that. That's why you're here. But I think it goes without saying that how important it really is. So I would encourage everybody next year to bring one friend, one fellow co-operative member. Let's see if we can double the size of this, because it is through all our involvement that this works, right? What we're doing, a couple of things that I'd like to just point out for this year. So not only we're really trying to increase our grassroots effort, increase our member involvement at the local customer service council levels. As you all know, we have a customer service council at every branch. We're really excited. Actually, at our branch last week, we had folks visiting. Christy from Vermont came over because that hasn't been a model that was done before. So we're really excited to incorporate that customer service council model into our northern region now, and so all the branches will have that. The other thing we're doing that's new and a little different, we're always encouraging some new faces, new involvement, and we are actually having what we're calling a young producers forum, but a young producer council. That's the word I wanted. That they're going to be a part of our customer service council, but then every young producer, so there'll be one from every branch, will also have the opportunity. They've been invited guests to our meeting, and they will have an opportunity to kind of meet as their own council. Just again, trying to get that next gen involved, get some more of that grassroots involvement. So we're really excited about some of these changes. We're looking to also, as a board, we've been talking about making some changes to kind of the director nomination process, the nominating committee process. And I can tell you that was heard loud and clear for those of you sitting in the room that were on the nominating committee and in Albany. A message was loud and clear. So with that, we are going to continue to just try to make some changes and increase more, add value to the experience, and increase that involvement to create a better process. So I know Mike's getting ready here. I'm rambling on. So with that, I'm going to move on to my last point, which is in looking ahead. As we always talk about our strategic plans, we meet as a board. We're always talking strategically, but we meet specifically in August as our strategic planning meeting. And that's just really important that we're always thinking ahead as a cooperative, just as we are in our businesses. So in closing, I really just want to say thank you. Thank you for all being here. Thank you for everyone for being a member of our cooperative. I want to say thank you to the staff who makes it happen, and particularly for my fellow board members and directors for your service, and also to the director candidates for their interest in becoming involved. I'm really, as I said, thankful for not only this cooperative, but for the people to make it happen. At the end of the day, we can have the best technology, but it's about the best people. And I think we have the best people. So with that segue, I'm going to introduce the best CEO, Mike Reynolds, to give a little more deeper report on our financial status. So Mike.
Thank you, Laurie, and good afternoon, everybody. And once again, welcome to this year's annual meeting. After 2 years of figuring out how to do this all virtually, it's certainly a pleasure to be able to look out and see real people and real faces, and most of them probably won't freeze up, or a voice won't get frozen. Just great to be here in person, and certainly happy to share some thoughts, a couple different topics. But before I do that, I do just want to maybe go back to what Laurie said and thank a few people for making this possible, because the last 2 years really have been quite a journey. And if people had said, Mike, before you ever get to your first in-person annual meeting, you will have to navigate a global pandemic and complete a merger, I probably wouldn't have bought into that theory. But here we are today, and I think we have a great story to tell. And it would only be appropriate for me to thank some people who helped us get here. Let me start with Laurie, John Nope, our vice chair, and the entire board. Certainly they have risen to the challenge. You know, they signed up for 7 meetings a year and quite honestly turned into 12 for a while, and then lots of meetings in between. And I know as we look back at last year, I think John and Laurie spent something like parts or all of 75 different days working on farm credit business. And that is no small contribution to the success of this organization. I'd also thank the entire Yankee board of directors, not just those who made it to the final board, because I would tell you, while I don't have a ton of experience in mergers, I would dare say that if there are other associations or other companies across the country who are thinking about or trying to merge, they could learn a lot from the way those two boards conducted themselves throughout the entire process. It was an honor and a privilege, to steal Mike Brooks's phrase, for me to work with both of those boards to get through the process and get us to where we are today. So I would say thank you to the entire Yankee board, some of whom are not with us today at this meeting. I also thank folks like Ian Murray. The nominating committee process, as I listened to all the candidates today, I think we should feel really good about the future here at Farm Credit East. No matter who wins, they're all qualified, super candidates. I would look forward to working with any and all of them. And that's thanks to the hard work of our nominating committee and folks like Ian who contribute their time to help make a difference. I would tell you, Laurie talked about kind of a spirited discussion and a commitment from the nominating committee. You know, during that meeting, I usually attend, but it's more so to just be on the outside, talking to the candidates, getting to know them a little bit better. And after the candidates had been selected, the nominating committee went into kind of an executive session. And usually that's about a 5 to 10 minute conversation, and everybody thanks each other for a great day and they go home. Well, it felt like 2 hours later, I'm still sitting in isolation by myself at this point, wondering if they were maybe reconsidering something more important. But it just goes to show that the commitment, the enthusiasm, and the dedication they have. And as Laurie said, we are going to rethink and enhance the process for the nominating committee in appreciation for all that they do. So thank you, Ian, and the entire nominating committee. And last, but certainly not least, we can hear all the great things about management or the board, but what made the wheels turn over the last 2 years was our team of approximately 600 staff who are out in the field every day. They're the ones who worked from home. They're the ones who figured out how to get our customers their money. They're the ones who worked through the Paycheck Protection Program, did all the paperwork to get our customers $100 million, and then turn around and get it all forgiven for them, probably the most important part. So many thanks to as I said, the nearly 600 teammates who are out in the field, most of whom aren't here today, but for the ones who make the wheels go round in this organization. So again, several topics I'd like to cover today. Spend a few minutes on each one. Let me start with financial results. You know, certainly we're hoping that the pandemic is behind us, or at least for the most part, it's behind us. We're looking at, as we think about the PPP program, government money is starting to slow down the inflow of it. Certainly we've gotten the forgiveness that we were promising customers, and that made a big difference. We look ahead to loan growth. We've had 2 good years of strong loan growth. We anticipate that this year will be another good year for growth. Certainly some of the commodity price increases, supply cost increases, et cetera, contribute to the need to borrow more money. But our customers continue to invest in their own futures, and we want to be there to help them. I would tell you the margins have been relatively good. There is new competition entering the market all the time. And that's good for customers. It's going to keep us sharp. It's going to keep us lean, and we will continue to work through those processes. I would tell you that last year's financial results were very strong overall. We exceeded our budgets by a material amount. Now, part of that would be for what we call one-time events, one-time expenses, one-time income, whatever you want to call it, that really buoyed those numbers up above our budgets. Part of that would be thanks to the patronage from our bank, CoBank. We have Tom Halverson, the CEO here, Brenda Frank as well, made a significant difference in our bottom line. And we have a good working relationship with CoBank. We trade credit with each other. It's good for risk management. That's a big part of our success, is that relationship we have with our funding bank, and we look forward to continuing that. As I said earlier, both organizations stayed focused on serving our customers and generated very strong financial results, paying over $100 million in dividends back to our customers. So from a financial dashboards perspective, Laurie mentioned that last year the two boards got together in August. And again, this was both full boards got together. We really had a long and thoughtful conversation about who we want to be and where we want to be in terms of setting customer value. And the board agreed that we want to maintain strong capital. We want to make sure that in good times and bad, we're able to provide consistent lending and financial services programs to our customers, no matter what. So we have to operate from a strong capital position. And they targeted 16 to 18%. So as you can see here, we continue to ride right in that target zone, and we expect to be able to do so going forward. Again, credit quality is one of those things that we measure. It's the overall health of our portfolio. And I think any of us, if we go back to March of 2020, said, what do you think things are going to look like by the time we get through this pandemic? I doubt anybody in this room would have said, we're going to be better off than we ever have been. And I would have been one of those people who was more concerned about the downside than the upside. Partly due to the government programs, obviously they helped, but largely due to the innovation and resilience of our customers and the hard work of our staff. I can tell you that today, credit quality is at the highest level it's been in my entire 32-year career. True testament to our customers and to our team. Return on assets is really about profitability and a combination with efficiency. And our board decided that a number on the long term at 2% or better would enable us to continue to pay 125 basis points of patronage, continue to reinvest in our company, maintain our capital levels, and move the organization forward. As you can see here, we have been north of 2%. We anticipate that for the next few years, that number will be down slightly as we continue to reinvest in some of the digital and other technologies. As Laurie said, those are quite expensive, but we truly believe in the long-term value of those. And so over the near term, there will be some increases in expenses. And those of you who have heard me speak before know that I am an absolute believer in the value that our financial services bring to our customers. Beyond just for making loans, our tax preparers, our consultants, our appraisers, our crop insurance programs add real value and risk management opportunities for our customers. We're now up to roughly a $30 million book of business, which puts us probably, if you think about it in those terms, we're one of the largest accounting firms in the entire Northeast. Forget ag or non-ag. We're one of the largest accounting and financial services firms in the whole Northeast, something that I'm very proud of. So let's talk about 2022. Where do we go from here? Obviously, priority one is making sure that the merger is successful. And as Laurie mentioned earlier, on January 1st, we were one combined organization. The transition went as smoothly as you could have hoped. Now, there's more work to be done. We had to merge systems, two completely different systems into one. That leaves some work for our staff to do to get everything cleaned up, but we'll do that in the due course of time. Now we can bring all of our resources to expanding our business, growing our footprint. We have some new services that Farm Credit East offered that maybe weren't offered in the Yankee territory. Those customers will now have access to those as well. So we look forward to implementing everything that the merger had promised us and bringing that value back here to the Northeast. A lot of what we're going to do with the digital space is really trying to make business easier. I would tell you, and we expect that we know our customers better than anybody. We have more information, more data, more history that should make it easier and faster for us to make a loan decision or provide financial services than anybody else in the marketplace. So we're going to continue to work through technology and other digital tools to make it as easy as possible to do business with us. Obviously, we have to be streamlined, we have to be efficient. And you heard things about some of our pillars or my vision board. One of the latest additions to the vision board would be protecting our customers' information. There's very few things out there that I believe could do more damage to our reputation and to our customers than to allow the information that you entrust to us to be breached and let out into the public. So we're going to do everything we can to maintain your privacy and protect that information. And looking forward to growing the business as we go forward. I want to talk a little bit about ESG. It's kind of a term of art now, very popular. One of our other pillars, if you will, in terms of our vision, has been to be good members of the community, to give back to our communities where we work, where we live. And that could be our customer community. It could be our employee community. It could be our local community. It could be our global community. And so a lot of this, to me, if you think about environmental, social, and governance issues, is really a natural extension of what we're trying to do each and every day and each and every year. And that's do the right thing all the time. So some of the things we talk about here, environmental, let's start with that. You probably hear things about climate risk, global warming, things like that. You know, and there have been some pieces that quite honestly have not been very flattering of agriculture. I personally believe agriculture has one of the greatest stories to tell of any industry out there. And I think there's a role for an organization like Farm Credit East to help tell that story. We're going to be out there offering programs. We have dedicated a position, a senior position, to Dave Lane. Where is Dave at here? Dave back there. So Dave's full-time job is working in this area, looking for ways that we can help our customers be successful in this space. I believe our job is to help our customers be successful, and then our organization will be successful along the way. Social has to do with our HR practices, diversity, equity, inclusion. We, like all of you, are big believers in treating everybody equitably. We dedicated resources to try and do even better in that space as well. And governance, as a cooperative model, being governed by our members, I don't know if there's a better story out there, a better model out there to live those aspirations out. So now we look ahead to the industry conditions and general outlook for this year and the future. I think as you scan the horizon, there are plenty of challenges out there. Every year we do a slide similar to this. We did one last year and the year before, and every year before that, even in our other sessions. And there are always going to be challenges. I believe there are some unique challenges. The war in the Ukraine, for one, obviously that is just a tremendous human tragedy beyond any impacts it may have to our industry or our finances. But really is one of those things that we have to keep an eye on. You heard a little earlier, lots of talk about global markets, and we have become a global market. But we have to be able to solve our problems one customer at a time. But just last week, I had somebody ask me about, kind of outlook for our customers in our industry. It doesn't matter whether it was dairy or grain. They said, well, with dairy prices where they're at, man, everybody must be looking at real optimism for this year. And I don't think we can any longer broad brush how we look at our customers. Customers have gotten very good at their own risk management. And I said, well, that depends. Let's take dairy. If you floated your milk price and you locked in your feed last year, you might be feeling pretty good. If you went the other way, I think it's a very different story. So the way we've always approached it is to look at customers one at a time, help them solve their problems based on their circumstances, and not make too broad of a generalization or try to solve things with one broad brush. Obviously, things like labor here in New York State, a big deal. Overtime laws will have a significant impact on our customer base. We'll continue to monitor that, be engaged in the discussions, do what we can to help. Obviously, the last one on the list, interest rates. Boy, I wish this was a virtual meeting. What I've decided is I'm no longer going to try to predict anything to do with interest rates, but I will share the best information that we have available. And I will tell you, it is a rapidly changing story. We did our business plan less than 90 days ago. And the best information we had at the time was there would probably be 3 25 basis points increases throughout the year. So 75 basis points, 0.75% over the course of the entire year. Depending on who you listen to now, that may be more like 1 3/4%. Ranges are probably between 5 and 7 more rate increases. We just had one last week. So our philosophy has been and will continue to be to move our borrowers' variable rates with the cost of funds, which correlates very closely to what the Fed does. So we will be increasing interest rates, variable interest rates by 25 basis points beginning of next month, and we'll continue to try to move as the market moves going forward. But quite a diversity. It's a little tough to read, but this gives you an indication. These are all the opinions of various members of the Federal Reserve Board in terms of where they think interest rates should be at different times. And so you look at some numbers in 2022 going as high as 3.125%. Well, that's a 300 basis point increase from where we started the year. I hope that person's really wrong, but we don't know. Obviously, the events throughout the globe all impact where it goes. We'll do our best to continue to just monitor the situation and adjust accordingly. So at the end of the day, we are part of a bigger system. We all borrow our money together. We're all on the hook for each other's debt, so that the health of the system as a whole matters to us here in the Northeast. The good news is I can tell you that the system looks a lot like what you're hearing about Farm Credit East here. It is in a very strong position overall. Credit quality is at a very high level. $6.8 billion in net income, with roughly 40% of that paid out to customers in patronage. Just about $3 billion across the system paid back to customers in the form of patronage. Very good story there. Strong loan growth across the system. Obviously, some of that influenced by the run-up in grain markets and so forth, but growth nonetheless. We're well capitalized and credit quality remains very, very strong. So as we wrap it up here, I would tell you that despite the challenges that are out there, I continue to be optimistic about the future. I continue to be optimistic about our customers, their innovation, their resilience. No matter what challenges we face, the customers have always figured out how to make it work. You know, we have a great story. We are the industry that helps the people who provide food, clothing, and shelter to the world be successful. I couldn't think of a better mission to be a part of as we go forward. You know, there's a next generation, and there's next generation of agriculture, of customers. There's a next generation of staff who I'm very optimistic bring great talent and enthusiasm to what we're trying to do, new ideas to help us get better. You know, particularly as we enter into some of this digital space, I'd like to hire a bunch of 11-year-olds to help us because they can figure out this stuff better than a lot of us can. But some of our new hires are just great minds, looking forward to their insights. We have a great team overall, and I still believe there are markets out there for us to help and to grow with. So with that, I will stop and take any questions. I will admit I do feel bad for Terry, so I'm going to take them in reverse alphabetical order. Terry, if you have any questions, you get to go first, but happy to take any questions that may be out there.